Welcome to the deep dive. Today we're plunging into the crypto world, specifically that huge recent surge. You know, the one that pushed the total market cap to, what was it, an unprecedented $4 trillion. We've got a ton of source material here, and our job really is to unpack it all, find the core insights, the details behind how we actually got to this, well, pretty monumental milestone.
Exactly. And we're not just, reading off numbers. We want to get into the why. What were the regulatory shifts? What about the big institutional players? That's what really underpinned this. And maybe more importantly, what could it all mean for digital assets going forward? How we think about value even.
Right. So yeah, we'll break down those key numbers, definitely cover the big legislative wins, look at the massive amounts of money flowing in, and of course, touch on what the analysts are watching for next. Because this market, well, it keeps evolving fast. Okay, so let's start right there with the headline figure. $4 trillion total market cap for all cryptocurrencies. I mean, let's unpack that a bit. What does that number really tell us? Is it just like a big psychological barrier, or is it something more fundamental about where crypto is today?
Well, it's definitely more than just a number. It's quite significant. Devere Bryan over at First Digital, he put it quite well. He said, it underscores the industry's rise as a mainstream asset class. So, it's signaling this shift. Crypto isn't just this niche tech thing anymore. It's attracting serious capital, serious regulatory attention like traditional markets. He even called Bitcoin digital gold fueling unparalleled wealth creation. Strong words.
Yeah, digital gold, and the scale is just, wow. Bitcoin's market cap alone hitting $2.4 trillion. Ethereum at $440 billion. Together, that's, what, over 70% of the entire market? Just those two. And $2.4 trillion for Bitcoin. It's like the size of France's whole economy, roughly. Puts it in perspective, right?
Absolutely. And their peaks were impressive, too. Bitcoin hitting over $120,336. Ethereum surging past $3,647. They pulled back a little since then, sure. Bitcoin's trading around $118,673 now, and Ethereum about $3,610. Still very high levels, though.
Okay, so the numbers are huge. But what really lit the fire under this, it wasn't just retail FOMO this time, it seems.
Yeah.
We heard about some key regulatory moves in the U.S. Can you walk us through those? Why were they such a big deal?
Yeah, this is really crucial, kind of gave the green light for bigger players. There were two main pieces of legislation that passed with bipartisan support, which is key. First, the Genius Act. That sets up the first federal framework for stablecoins in the U.S., big step. And second, the Clarity Act, which gives a legal structure for, the broader crypto asset space.
Okay, so clarity and structure.
Exactly. That regulatory certainty, that's what institutions were waiting for. It reduces their perceived risk. And both bills were headed to President Trump, expected to be signed. So the market saw that as basically a done deal.
And the timing. These laws passed right as the market was making these huge moves. Coincidence? Or did the market react directly?
It's really hard to see it as just coincidence. The market definitely read it as a direct link, like cause and effect. You clear up the rules, reduce the risk, suddenly it's much more attractive for that big institutional money. The timing just highlights how ready, how eager institutions were for that kind of legal foundation.
Okay, so the rules started getting clearer. Let's follow the money then. Because the institutional flow, it seems like the floodgates opened. Spot Bitcoin ETFs saw inflows of, what, $522.6 million on just one Thursday.
And that wasn't a one-off spike.
Right. That was the second week in a row topping $2 billion. So over $4 billion flowed in just 2 weeks. That feels pretty consistent.
It is. And to add some color to that, BlackRock's iBit fund, it grabbed almost all of that Thursday flow, like $497.3 million. That shows major player confidence. Charmaine Tam from Hex Trust, she noted that the momentum looked like it would be sustained, short-term at least. And importantly, she said they didn't see that typical buy-on-rumor, sell-on-facts thing happen after the legislation news.
Okay. So it wasn't just hype then sell-off.
Yeah.
It suggests real conviction.
Seems like it. Tam actually thinks this momentum could continue. Her reasoning is that other countries will probably look at the U.S. getting its act together on crypto rules and follow suit, which could lead to even more global adoption and, more institutional money coming off the sidelines. It's potentially a global domino effect.
Interesting. Okay, so Bitcoin's leading. Institutions are piling in.
Right.
But what about the rest of the market? People always start talking about altcoin season when Bitcoin does well. Is the data showing that happening now? Like, are other coins getting a boost?
It definitely looks that way, yeah. There's a noticeable shift in market dominance. Ethereum's share, for instance, it jumped from around 9% up to 11%, while Bitcoin's dominance actually dropped by about 4 percentage points. Analysts see that as a pretty classic sign. Investors feel a bit safer maybe and start rotating into potentially higher risk, higher reward assets, altcoins.
So Bitcoin kind of paves the way, de-risks things a bit, and then money flows outwards.
That's the general idea, and Ethereum's role here is really significant. That surge past $3,600, it was fueled by a massive $726 million in single-day ETF inflows for Ethereum specifically. So Ansen called that systematic adoption, not just speculative frenzy, but actual systems integrating it.
Okay, so Ethereum's price and inflows are impressive. But stepping back from the charts, why is Ethereum so important? What does it actually do that makes people see it as fundamental?
Right, good question. It's not just another coin. So Hansen made a really key point here. He said, sustained value will premise on live activity at the infrastructure level. And that's where Ethereum shines. It's the base layer, the infrastructure for so much activity. It hosts more than half the world's stablecoin supply, for example. Tons of decentralized apps run on it. Sen argues that programmable money is inevitable, basically table stakes for the future of finance. And Ethereum is, well, a huge part of making that happen. It's like the digital railroad tracks.
Got it. Infrastructure, not just speculation. Okay, so looking ahead then, things have moved up very, very fast. What are the analysts saying now? Are they expecting this rocket ship to just keep going, or is there maybe some caution creeping in?
There's definitely caution, yeah. A sense that maybe things need to cool off a bit. Bitcoin had its best week since May, which is great, but analysts are looking for consolidation signals. They're watching closely. QCP Capital, for instance, they noted that Bitcoin sort of paused after it broke 120K. That triggered some profit taking naturally, which started to put a lid on the momentum, at least for now.
So a natural breather after such a big run-up.
That seems to be the thinking. QCP's prediction is actually quite specific. They suggest a potential pullback towards $110,000. That level was the high point of the previous cycle. The idea is that finding support there could build a more stable base for the rally to continue, rather than just shooting straight up unsustainably.
Okay, that makes sense. Build a foundation. So analysts are cautious. What about prediction markets, where people are actually placing bets? Does the crowd agree?
Yeah, this is where it gets really interesting, actually. The prediction market data seems to strongly back up that cautious view. On Myriad, which is one of these platforms, only about 7.4% of users were betting that Bitcoin would close above $122,000. Tiny minority. An overwhelming 94% voted no. That's a pretty strong signal that traders, collectively, are positioning for some kind of near-term pullback or consolidation. It lines up almost perfectly with what the analysts are saying.
Wow, 94% betting against it, going higher immediately. That's telling. Okay, so let's try and wrap this up for you, the listener. We've seen crypto hit this massive $4 trillion mark. Huge driver seems to be these critical regulatory changes finally happening, clearing the path. And that's coupled with just unprecedented amounts of institutional money pouring in, especially through things like the Bitcoin ETFs.
Right, and that combination seems to be setting the stage for maybe an altcoin season as investors look beyond Bitcoin. But at the same time, there's this clear signal from both analysts and prediction markets that the market might need to catch its breath, prepare for some consolidation.
So a mix of long-term bullish signals like regulation and adoption, but maybe some short-term bumps or pauses ahead.
Exactly. And it really leaves us with a big question, doesn't it? If these moves, the legislation, the institutional buy-in, if they truly are solidifying crypto as a mainstream asset class, how does that fundamentally change how we even think about value or investment in this digital age? Are the old rules starting to bend?
That's a great point to ponder. How does this shift really change the game for finance, for tech, and maybe for your own understanding of where things are headed? Lots to think about there. Definitely something to mull over. Thanks for tuning in to The Deep Dive. We'll catch you next time.